Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Tuesday, February 17th. It is an exciting start to the week. OpenAI has snapped up OpenClaw's founder, Peter Steinberger. We'll talk to one of our AI reporters who scooped news of those talks happening late last week before the announcement went live. Shares of Pinterest are trying to rebound this week after earnings triggered a 20% single-day plunge late last week. My colleague Ann Guillen has in-depth reporting on what's happening behind the scenes, including a series of code reds at the digital scrapbooking platform. I'll also be joined by Yahoo CEO Jim Lanzone to discuss the company's own turnaround strategy and how AI factors into its playbook. And finally, the Information has exclusive reporting that Anduril is in talks to raise billions of dollars at a $60 billion valuation, roughly double its last private funding round in June. We will speak with one of the reporters behind the scoop about what this funding would mean for the company's expansion plans. It's going to be a fun show, so let's get right on into it. In the latest development in the OpenClaw saga, Peter Steinberger, the founder of the project, is joining OpenAI. The announcement over the weekend followed exclusive reporting from the Information that OpenAI was in advanced talks to hire Steinberger. To break it all down, I want to bring on Rocket Drew, one of the reporters behind that story. Rocket, welcome back to the show. It's great to have you here.
Thanks, Akash. Great to be here.
So we've started each of the last 3 weeks with big news about OpenClaw, and what a full circle in some ways this story has come, although I don't know if you can call it full circle. It's a development that I don't know if I expected. Did you see this coming?
I did see this coming, at least as of last week. We knew that Steinberger was in talks with some of the AI companies. He also had VCs banging down his door. It was clear that OpenClaw was destined to become something greater than the sort of open source side project that it's been so far, but we didn't know where he was going to end up.
So what have both groups said about what Steinberger is going to be doing at OpenAI?
Well, OpenAI has made clear that they want him to work on personal AI agents, which is what OpenClaw is. I mean, that's clearly been a key area of success for him so far, and OpenAI is looking to ride that wave a little bit. For Steinberger's part, he's made clear that he's dedicated to open source. He really cares that OpenClaw remains open source in the sense that anyone can download it, they can tinker with it, developers can modify it. That's core to his vision of what OpenClaw is. So to accommodate that, OpenAI is going to set up a foundation that will house the OpenClaw project. We're still waiting to learn more about what the details of that will involve, but it's sort of on brand for OpenAI to create a kind of bespoke nonprofit structure in order to accomplish a very particular mission.
Right, bespoke and nonprofit, and then maybe somewhat regretting the way that they structured it.
Yeah, and then I'm sure Elon Musk will have something to say about it.
Right, right. But so it sounds like this is very much this is sort of an acqui-hire in terms of the talent sense. I mean, they're not getting any part of OpenClaw itself. That's remaining an entity on its own. But they're saying to Peter, hey, we want you to do what you did, but do it for us. Help us build out our agents. What exactly is OpenAI's agent product portfolio right now as it is?
Yeah, they do have many agents, but they're different from OpenClaw in a few notable ways. So maybe their best known agent is Codex, which is a coding agent, which means it's specialized for writing code. It's meant to replace the job of a software engineer. In contrast, OpenClaw, as we've talked about, is sort of a general purpose framework for creating whatever kinds of agents you want that can do anything on your computer. So sure, they can write code, but also they can check your email and your calendar. They can send Slack messages. They can do things online. You can text with them from your favorite messaging app, from Telegram. Whatever. It's much more general purpose than just coding. OpenAI also has deep research, which prepares research reports, and a shopping agent, which is sort of a specialized version of deep research. And they also have ChatGPT agent mode. But agent mode is really focused on completing sort of shorter self-contained tasks on a browser, like book me a flight or fill out this form for me. In contrast, OpenClaw is very general purpose. And a distinction that we've made here before on the show is that OpenClaw is not itself an agent. It's a framework for creating agents. In
Right.
contrast, ChatGPT agent is pretty narrowly scoped. So I would say, on the one hand, that's something that Steinberger offers is this direction of more powerful general purpose personal agents. But also, to your point, I mean, clearly Steinberger is doing something right. He had this overnight viral success with OpenClaw. It took off like crazy with developers, and presumably OpenAI is interested in tapping into some of Steinberger's talent, and he clearly has a finger on the pulse of what developers are interested in terms of agents.
I'm also trying to put this news in context with what we've seen at Anthropic. We saw Claude Cowork really taking off and dominating headlines a couple weeks ago. This was around the same time that OpenClaw was coming into the conversation. Do you see this as a clear, OpenAI's answer to Claude Cowork in some ways?
Mhm. Yeah, yeah, I do. I think they will be sort of natural competitors. I think Claude Cowork will have a greater in with enterprises because it offers more security. It is kind of more narrowly scoped. Like you usually tell Claude Cowork what particular folder you want it to work in and what particular sort of close-ended task you want it to carry out. And then when the task is done, it's done. It's unlikely to be sort of running in the background indefinitely, the way you could set up an OpenClaw agent. So I think Cowork will have sort of a natural advantage there, but they're accomplishing different things. They're reaching for different audiences. I think it's interesting that Anthropic is not where Steinberger ended up. And you could think there are different reasons for that. I mean, one is maybe just naturally Anthropic is more inclined in this direction of enterprises, so they're less interested. Two, Anthropic has kind of an interesting relationship to open source historically, and you could think that maybe they wouldn't be interested in developing open source technology like this. And three is that Anthropic and Steinberger got off on kind of an interesting footing because Anthropic asked him to change the name of Claudebot. You'll recall OpenClaw was originally called Claudebot, and Anthropic saw that as sort of stepping on their intellectual property with the Claude name. So
Right.
maybe that foreclosed some avenues there.
But it is kind of interesting, trying to think about what OpenAI hopes to create with Peter Steinberger now on their team. I mean, I'm trying to think about if OpenAI would ever try to replicate something uh, as wild as OpenClaw, because you and I have talked on the show previously about, look, the tool is great and you can do a lot with it. It also means that there are security concerns that could come with it, and there are modes that really unlock a lot of possibility and also a lot of risk. And so, I guess the question I have for you, Rocket, is: do you see OpenAI really trying to replicate OpenClaw in everything that it was within its own company, or is this something where it will be a lot more guarded and maybe resemble a little bit something more towards the Claude Cowork enterprise solution?
I think we'll probably start with something that does have more guardrails. It has more protections against your agent getting hacked or prompt injected when it interacts with random users and random pages on the internet. But I think gradually we'll take steps in the direction of the sort of freedom and openness that OpenClaw brings. It is going to take a while to get there, but Steinberger has said his goal is to get OpenClaw to the point where even his mom could download it and install. What we've talked about so far is that OpenClaw is difficult to set up. It takes a technical user to do that, and it especially takes some technical expertise to set the permissions just right and implement the sort of security precautions that will ensure that OpenClaw doesn't accidentally share your bank account information. But if Steinberger's saying his goal is to get it to the point where even his mom could download it and use something like this, I think that's the direction we're going to be seeing from OpenAI. It just may take some baby steps to get there.
What has been the AI community's reaction to this? Have people been celebrating this, or have they kind of been saying that this is just the big getting bigger?
Yeah, yeah. The reactions have been mixed. I think some people are pessimistic about the future of OpenClaw now that one of the sort of large players in the space has grabbed onto it. People celebrated it so much because it was this open source side project. I think people should be reassured that Steinberger and OpenAI have doubled down on their commitments to keeping it open source, but there is a sense that it's going to spoil some of the fun and the weird, wacky freedom that it has unlocked. On the other hand, I think people should realize that, Steinberger has been very vocal that he didn't have the personal time to deal with all of the requests that people were sending in for OpenClaw, for debugging all of the issues that were coming up and adding the security precautions that people were asking for. I mean, he was just overburdened. He needed a bigger team in order to grow OpenClaw into a really usable product. And he was also burning cash, spending money on developing it. I think he had said $10,000 to $20,000 a month. And OpenAI stepped up and started footing some of that bill. But I think people should also recognize that this is maybe the path that will bring OpenClaw to the masses or develop it into a fuller fledged product.
And if you read his blog post, I mean, he basically he said, look, I didn't really want to build another company. He says I've done that drill before. And so one question I had as I was seeing this news play out was, well, how big could OpenClaw have become in terms of a business, right? It's an open source project. Could this have been another multi-billion-dollar business? And basically what he lays out in the blog post is, I don't really care what it was going to become. I didn't want to do the work. I wanted to build the tools, which is what OpenAI is going to let me do. It does lead me to the last question, though, which is, I wonder how much OpenAI is paying him because that number is not out there. But I think we do know that he seems to have been getting offers from other labs as well, and so I do think it's a pretty hefty paycheck at the end of all
Yeah, I
this.
bet it is. Yeah, I would just say don't trust the numbers you see on Twitter. There's a lot of numbers floating around on the internet that seem like mostly speculation, but it's true. And he said he also had an offer from Meta, which has been throwing around some pretty big numbers in terms of compensation for
Yeah.
the people that it's acquiring. So, it's possible Steinberger was able to play them off against each other and get them to raise their offers. It's difficult to say, but surely he's being compensated pretty well. Yeah, if he had gone and made a startup himself, since it's open source, hard to say what would have happened in terms of revenue. But again, he had VCs banging down his door. I'm sure he would have had no trouble raising a lot of money, especially in the current ecosystem for raising funds for buzzy AI startups.
Well, I'm excited to see how this all plays out, Rocket. I want to thank you for coming on. That is Rocket True, our AI and robotics reporter here at The Information.
Thanks.
Pinterest shares are looking to rebound today after the company reported disappointing quarterly results last week that sent shares falling 20% in a single day. At the center of that story is revenue growth that is decelerating. Our e-commerce reporter Ann Guillen today published some in-depth reporting about what's been going on behind the scenes. The company declared its own code red well before this stock drop, it turns out. I want to bring on Ann to tell us more about what she has learned. Ann, welcome back to the show. It's great to have you here.
Hi, Akash.
What's going on at Pinterest?
So you mentioned the code red, and in my story today, I get into what that has looked like internally. That's mainly aimed at addressing some of the slowdown in their ad revenue growth that they've been dealing with over the past couple of months. Also, in my story, I get into Pinterest has really been trying to revamp a lot of their sales and ad teams. They just brought in Lee Brown, who was at DoorDash. He's also been an ad executive at Spotify. So Pinterest is really, I think, feeling the pressure from investors now, with their earnings report last week, but also they've certainly been feeling the pressure internally for the past couple of months and really trying to both kind of turn around the ad business in the short term as well as deal with this longer term, more kind of existential question of what AI is going to do to their business.
So you talked a lot about all of the problems facing the company, and just to run people through the gamut here. I mean, one of the problems that users don't check the app as often compared to other social apps. You talked about the recommendation algorithms. The fact that they haven't been able to target and measure how well the ads work. And then there's obviously the competition aspect from Meta and Google. I wonder if you think about all these problems and from your reporting, what is the single biggest problem facing the company that Bill Reddy is most concerned about right now? Is it AI or is it really just the fundamental platform?
I mean, the immediate challenge and the immediate changes they're going to have to show to investors are is turning around the ad business. And so it's interesting that you kind of describe them as a social media app, because I think Pinterest is trying to kind of sell the narrative, to investors in particular, that they shouldn't really be compared as directly to other social media apps. They're really trying to position themselves, especially in the age of AI, as a search app. And so they're really pointing to all of the, it's a mainly visual platform. So they're trying to lean on kind of their expertise there and all of the search data they have about what people are searching for on their platform, and really use that to, say to advertisers that it's a good place to advertise, because people are often looking on Pinterest for, things like clothing or beauty or furniture. And so those are all really strong categories for advertisers. So I think kind of the main challenge will be for Pinterest to kind of show to both to advertisers and to investors that they really should be thought of as a search platform, and not in the same way as like an Instagram or a Facebook, and really kind of make that transition into more of a search app versus more traditional social media.
Well, and I think one thing that I just realized, actually, as I've been thinking about this conversation, is that when I talk about Pinterest, sometimes I refer to it as a digital scrapbooking platform. Sometimes I refer to it as a social media platform. And so I think this sort of identity crisis that you're describing, where advertisers don't really know what the one thing is that we should be going to Pinterest for. I mean, that's sort of a problem that everyone has right now, is we're not really sure, what the thing is, and what it specializes in. I want to go back to the code reds that you talked about. What do we know about where those stand right now, and if those have yielded any results or changes within the company?
Yeah, so I spoke to Pinterest's chief technology officer, and he told me that the code red is still going on. There are a couple of kind of key metrics that the company is working towards in order to, get out of the code red and declare that it's over. But a lot of the code red projects have been aimed at boosting some of those key metrics, like I mentioned, like, in particular in the ad business. And so what Matt, their CTO, told me yesterday was that already some of the changes to their ad recommendations and modeling systems that they've put into place, those have already translated to a better return on spending for their advertisers. And Pinterest has been able to kind of reallocate some of their GPUs so that they can, kind of test these changes very quickly with all of their advertisers. So they've been able to kind of come up with some of those changes and then also get them live for all their advertisers. So they clearly, are feeling the need to work quickly, and then also get those changes live for advertisers. So I would say, the code red's still going on, but I think Pinterest is feeling good for now, at least about the work they've been doing so far.
And where do you think this story ultimately plays out from here? You had a prediction late last year, maybe early this year. Your 2026 prediction was that OpenAI should buy Pinterest, or and we obviously know that that went somewhat viral, and people seem to latch on to this idea that maybe it was happening. We should say it was just a prediction. It
That's a
was,
prediction. Yes.
but people really latched onto it, probably because maybe they saw some sense in there. Do a lot of people think that Pinterest is going to be acquired? What are you hearing?
I think that's kind of the open question. I think there's no doubt there is a ton of underlying value in Pinterest's platform, both in their user base. It's dominated by Gen Z and millennial women, who are basically the most valuable categories for advertisers. So they have, a huge user base that's very valuable, and also just all of the data that they have. They have tons, they have billions of images and posts on their site at this point. The company said last week they have 80 billion searches per month. So that's, that's definitely legit search volume. I think just the question for them, at least in the near term, will be, can they kind of fix the monetization and fix the ad business? And so I think if they are able to fix the ad business, at least in the short term, that will keep Wall Street happy. But I think they're also contending with, the questions that a lot of tech and software companies are thinking about right now is how does AI kind of impact their long-term future? And I mean, you see companies like Google trying to make their own Pinterest copycats. And so I think it just remains to be seen if anything will kind of take hold with users the same way that Pinterest has. And then, yeah, if the ad business isn't able to recover, then I think the expectation is they would think more seriously about a potential sale.
Great. Well, Anne, I want to thank you for coming on. That is Anne Guillen, our e-commerce reporter here at The Information. Our next guest is leading one of the most historic brands in Silicon Valley. Jim Lanzone is CEO of Yahoo, the company he joined in 2021 after it was acquired by Apollo. Lanzone has been leading the business through a turnaround plan that has included introducing its own new AI tools. He himself has had quite the career, previously leading Tinder, Ask Jeeves, CBS Interactive, and founding a few companies himself. I want to bring on Jim to chat with us about where he plans to take Yahoo from here. Jim, welcome to TITV. It's great to have you here.
Gosh, thanks for having me. Great to be here.
So Yahoo is a name and it's a brand that certainly people know very well. I think given the long history of the company, people might be less familiar with what the current business is. And it's got so many different properties in it between fantasy and mail and news. So just give us the primer here on when you think of Yahoo, the business today, what are the different segments of the business and how do you structure it?
Yeah, it's funny. Having been a part of this turnaround now for a few years, I actually think people are very familiar with it. It's just that they're familiar with the brand that they use. So, Yahoo Finance, Yahoo Sports, Yahoo News, Yahoo Mail. These are all number one or number two in their categories. And any given month, we are 250 million users a month in the U.S., 700 million globally. So for our users, and there are a lot of them, they're very familiar with those brands. Obviously, in Silicon Valley, the larger Yahoo story, which is now 30 years old, has a lot of baggage with it that needs explaining. I think that kind of adheres to maybe the global brand of it. But no, Yahoo is, especially now a few years into our turnaround, it's a very healthy, thriving business. And we've now kind of evolved to the point where we're starting to take shots on goal on the product side.
So walk us through the business today, the structure of it. I mean, how do you think about it? Do you think about content as one bucket? Do you think about the mail and the advertising business as another bucket? What are the different sort of pillars?
Um, Look, I'd say the CEO of Yahoo used to be put on stage kind of for sport and asked to define whether it's a media company or a tech company. The answer is it's a product company, right? When you're using fantasy football, that's a product. Stock charts, that's a product. Yahoo Mail, Yahoo Search, where we're still the third largest search engine in the US. So like any major consumer internet company, we come at it from a consumer first basis. These things collectively then add up into one of the best treasure troves of data on the planet. We use that not only to provide better user experiences, but also to provide insanely, well targeted advertising that converts at an A+ level compared to most, major internet companies out there. And that's still the spine of the book for us from a monetization point of view. So it is all of those things, collectively. Together, but each one of them operates independently internally. And from that standpoint, we have a general manager on charge of each business. So someone who's an expert at mail, an expert at sports, at finance, et cetera. And we let them run and compete in their categories. And, by that token, I would say we're very similar to other conglomerate internet companies, right? Neil is the CEO of YouTube. You have Adam running Instagram, and we have our own, smaller, in some cases, version of that. But so Yahoo really collectively comes together with the top level brand, but we are, as a company, we are strongest as a bunch of independent products, competing in their categories.
Walk me through the turnaround plan that you have executed on over the past 5 years. What were the initial problems that you identified, and then one by one walk us through the past 5 years and what the major milestones you've hit are. And then the second half of this is I want to talk to you about the AI era and what
Yep.
you guys are launching there. But just walk us through the last 5 years
Yeah.
and what your playbook was.
I mean, really, it's a little over 4 years. We got a hold of this asset at the end of 2021. Very interesting time to take over a company. It was the middle of COVID. People were not able to see each other. We kind of had to get through some of that. The first couple of years of a turnaround are foundational, where you're identifying, the opportunities, both to improve things, but also like what you might be able to do with these assets on the upside. So we did that transformation work, and that involved everything from reorganizing the entire company, bringing in outstanding talent, from my past days, as well as their networks, and we really have incredibly talented people running these properties now. And then we also had to do things like completely redo the business model. The underlying revenue engine of this company was very different and really had to be replaced. So in early 2023, we swapped out a lot of the past 10 to 15 years of ad tech that was supporting the revenue and replaced it with a whole new revenue engine. So you really had to go through all of those steps, which then left you in 2024 with the ability to start to rebuild all of our consumer facing products, and every pixel on Yahoo was rebuilt between 2024 and early 25, leading to some of the things we'll talk about in a minute on the AI side that we've done. But really, those are all the steps. So I would say for a turnaround is that Yahoo had great bones. And even after all this time, it had a huge amount of traffic, which is the hardest thing to get. It had a very well-known brand, which even though it had been through the ringer, is also very hard to build. And on top of those two things, you can, really do things. You can optimize the team. You can, figure out the right ways to make money, and you can start to build better products. And it's funny with some of the things that we've done. People have said, "I wouldn't have expected that from Yahoo." And my first instinct is, well, this is definitely not the same Yahoo. This is an entirely new team of people who were not here for the periods of time that they're talking about. We're just people who came in, saw an opportunity with these assets to do something special. And yeah, if we're successful at that, then I think the turnaround's a great story. But I promise you that every day that we go to work, we're focused on how do we create great user experiences and deliver for our advertising partners.
So now you've firmly entered the AI era, and you've come to market with Scout, the Yahoo powered AI chatbot, and you've said that it leans on a lot of the data that you have in the background through all your Yahoo properties. What to you is the differentiating factor here with Scout as you compare it to all the other
Yeah.
chatbots that are built from search engines?
Well, first I'd say there aren't very many. So I'd say just by entering the
The
category,
big ones, the big ones,
yeah, yeah,
the
I
big
actually
ones.
I agree. I don't
How
think
do
that.
you compete?
It's interesting that as you really look around the category, you have the major LLMs, which would include Google, and then it's really Perplexity and us is the only like really scaled search engines of this nature. As we looked at that category, coming out of our transformation period and into the ability to take shots on goal, and still being the third largest search engine in the U.S., we had to make a choice. Yahoo has been outsourcing search to Bing since 2009. So it's a very long time since Yahoo really tackled search. But as we looked at the AI category, it really turned out to be an opportunity to get back into it ourselves, and that the best people to build the next generation search engine for Yahoo was Yahoo. And the reason is because we are the ones who have the first party relationship with all of these users. 75% of people who come to Yahoo come directly, meaning we're not acquiring users and bringing them down a funnel. They're coming directly to Yahoo. Over 70% of people who come every day are logged in. And so that really turns out then, if you put it on top of all the vertical data that we have and 30 years of experience and queries going back in search, we have this incredible, set of data that if you layer AI search on top of that, you could produce extremely high quality answers that are very unique in the category. And we also thought that we had something to say that was unique on the user interface side, which if you use Yahoo Scout, if you go to scout.com, you'll see it's different than anything else that you've tried out there. It's not done in chatbot fashion. It's much more congruent to search, which is where we're starting out. And so it gives you answers in that format, but in a much, more rich and robust visual way that, say, has a little more personality. And then, very importantly, takes its own point of view and has a core value around sending traffic back to the open web where these answers come from. The first generation of AI search kind of took all of that content off of the open web and then did like little citations, pointing back to that content, but not really sending any traffic downstream. And if you use Yahoo Scout, what you'll immediately see in the product, highlighted in blue, are links back out to the content that creates these answers. And we think it's an extremely important thing not to do just for our users and for the experience so they could check sources more easily, but also to keep the open web, surviving and thriving in the future. So we can keep getting these great answers, from all those products.
So if you are on the side of the blue link economy is still very much alive and well, and you have built a chatbot around that perspective, how do you think then about your own advertising business? And are you planning to introduce ads into Scout, if not already? I'm not sure. I would love to also ask you about your opinion on
Yeah.
having partnered with Anthropic. We obviously saw Anthropic's Super Bowl ad that came out
Yeah.
against some other ad-supported chatbots that are out there. What is your perspective on introducing ads in Scout, in chatbots? Is that going to be a significant part of your business?
Yeah, look, I mean, I think if you are subscription only, your business model is more like Netflix than it is, the search model that's gotten, Google to the top, and is such a high percentage of global advertising. Search advertising as a concept was litigated back in the late '90s. That question has been asked and answered, and with the emergence of Overture into Google AdWords and AdSense, this is something that is very congruent with the user experience that users expect and keeps the product free. Yahoo Scout is free. And so while I would imagine we would have, tiers of subscriptions down the road for deeper versions of the product, I think something that subsidizes the product for end users that is still extremely congruent with getting great answers is not only doable, but essential. And I think that there's a way to bring search advertising through to AI search. And I think it looks a lot like what we built. And the ability to introduce paid links in a way that is different and that users understand what is paid and what's not, but still enables a search marketplace to exist that has auction dynamics, competition that increases relevance, expands coverage, and drives yield for the property is something that really can be done, but also is essential to keeping these products free when they're very expensive to build. If you look around any other category, right? When our old team built CBS All Access, which became Paramount Plus, we launched right away with ads. And then when we introduced an ad-free tier, it was merely the amount that we made with ads, stacked on top of it. And it was always clear that Netflix would head down that pathway of having a product subsidized with ads because a huge number of people actually want a lower priced product. Some will pay for ad free, some won't. And so I actually do think it's a very uh, it's a sure thing that's going to happen in this category that it can really be done. And while the ads were funny and interesting, although they did paint chatbots in kind of a creepy way that I think Yahoo Scout does not do, and I think people who think that about chatbots should give our product a try. Um, it probably is not realistic that that's where things are headed. That it's going to be purely ad free.
But is there a risk at all that the traffic to Scout and the business that advertisers spend on finding ways to get brand awareness through Scout, would that cannibalize your search business at all? Is that a risk?
Well, I think it's a little like Indiana Jones, replacing the sandbag and the goal. Over time, I think these things um, evolve to the place that they're headed. They're clearly coming together, right? As you've seen the growth of Gemini in the rankings, most of that is with the introduction of the AI mode button versus people just downloading Gemini more. It's because these products are coming together, which really, a year ago is what drove us to start realizing that we had to do something in this category. We're not just going to sit there and have traditional search. We need to evolve the product for users. So it will continue to evolve. I don't see any way that really has much to do with whether ads are introduced or not, as long as they're very clearly ads and they are separate from the non-paid content. So no, I actually think the blend is where the product is headed, and what a search engine will have to do. And this is a 20-year-old evolution, right? Google has not been 10 blue links since 2004. It has had structured data in the product for a very long time, increasing over time, even before AI. So that evolution will continue. AI is another part of that. And I think Yahoo Scout is everybody should check it out. It's extremely interesting. We got a lot of great feedback on the UI, especially, but the quality of the results stands up there with anybody's. And I think is a really good example of where the category could be headed.
How many active users are using Yahoo Scout now?
Well, you got to give us. We're still just a couple weeks in, so we're not announcing that yet. We also,
I'm giving you a shot here.
yeah. I know you want to make news here. So it's
no. I just mean, we're talking about shots on goal. Gemini's coming out with their users.
We just launched in beta, so think about this as when they launched in early 23 or something. We just launched in beta, and what we really wanted to do is get in the hands of people first. And what I would say that is very interesting, as someone who's started companies, launched new products and new categories before, the most important thing, gratifying thing so far is that user numbers are growing every day, and that the gap is widening between the number of users per day and the number of searches they're doing per day is increasing every single day. So the people using Scout are using it more and more, and that is the sweet spot for what you want to see.
So where does all this leave Yahoo now in terms of its forward-looking timeline on an exit from Apollo? Is there going to be an IPO? What is the timeline for it? Or if not an IPO, I mean, how are you thinking about it?
No, I mean, I think we're the same as any pre-IPO company now. We're owned by Apollo, and certainly PE has a certain focus on outcomes that is is just the reality of it. But like any pre-IPO company, whether it was venture funded or owned by PE, the outcomes are you IPO or you sell, or I guess in some cases there are big internet companies that have stayed private forever, but I don't think that's our situation. But in terms of how as the captain of the ship and giving orders to the team, is to focus on product. It's focus on growth and let the outcomes take care of themselves.
Which do you think is more likely, an IPO or a sale?
Unclear. I do think, given the relative values of things, anybody to let Yahoo keep increasing in value is it's just making it more expensive. We really feel like we have a tiger by the tail here with this asset. We're going to keep increasing the value of it every day that goes along, and I think what we're doing with massive distribution, with hundreds of millions of users, with an ad model that completely works and converts at levels that are rare air in this industry, and with something that we're seeing across the category, which is data, both of our usage and our users over time with these products is a solid gold asset that just is extremely rare as well. These are all things that are going to be more and more valuable over time. So we're just going to keep building.
And let me ask you one more question before you go. As you think about the conglomerate that you're running here and all the different assets, I mean, would you ever consider breaking Yahoo up or splitting off different entities to sort of isolate parts of the business and go about it that way?
It's funny, that was part of the thesis originally, that perhaps that would be the case. What you've seen over time, and what I've learned more and more over time, is how much these things are really related to each other. And there's a real Yahoo ecosystem. The average user uses 2 or more of our products per day. And we have huge cross-pollination, across them. So while somebody might be, and you'll hear this, let's say, I don't use Yahoo anymore, but Yahoo Finance is my homepage, or they're in 5 fantasy leagues, or they use Yahoo Mail. The average user is going between these products, and I think with Yahoo Scout as a platform now that can really weave them all together, and the next step for Scout really is personalization, anticipating your needs and delivering it to you, what you might need to know or do before you've thought of it. The advantage of having all of them together, and maybe we'll build more verticals on top of this, or buy more verticals on top of this to expand what Yahoo means, rather than think about them independently and breaking them up. I definitely think we go further together than alone.
And last question for you, and then I'll let you go. The Polymarket partnership was really interesting to me that you guys did. Talk to me about where you think prediction markets are going from a regulatory perspective. You've sort of said that you want to play in the space, at least from, from adjacent ways, with the data and
Yeah.
stuff like that. But I mean, how do you think about that in the current regulatory landscape?
Well, obviously we'll swim with the current on the on where it heads from a regulatory standpoint. For us, it was very interesting is that we inherited in the sports betting category a really old deal with BetMGM that Verizon had done years ago, that is now up at the end of this quarter, finally, after all this time. And in between all that, we actually partnered with Polymarket, not only in sports, but in finance, and really across the Yahoo portfolio. Gave us an opportunity to do that in states where we didn't work with them, with BetMGM. And so, similar to partnerships that we've looked at in things like crypto for Yahoo Finance, we view this as an opportunity for something that to partner in a place where users need that product, but we don't, we're not the experts ourselves. So, again, I think some news came out today about prediction markets from on the federal side, and kind of protecting that. But again, if that is some open territory to operate, we're going to partner and we're going to get in there for our users.
So you think they're here to stay?
It's unclear yet, but to the extent that they do, I think distribution through Yahoo is something that I think all of them would love to be a part of, and it's been great to kind of play the field here the last few months to try to pick the best combination, of factors for the best partnership. So we'll have more announcements on that to come.
Great. Well, Jim, I want to thank you for coming on. That is Jim Lanzone, the CEO of Yahoo, here on TITV.
Thanks. Thank you.
The information has exclusive reporting that Anduril is in talks to raise billions of dollars in new funding at a $60 billion valuation. It is perhaps the most closely watched company in the defense sector right now. Joining me to share with us what we know is Corey Weinberg, our Deputy Bureau Chief of Finance. Corey, welcome back to the show. It's great to have you here.
Hey, Akash.
Let's talk about Anduril. I want to get to the current state of the business, but what do we know about the funding talks so far?
We know they're happening. Saying something. Anduril is probably the most rumored about company, gossiped about company in the sort of private tech world, aside from aside from OpenAI and Anthropic. And so there's constantly these like funding rumors about them. And my colleagues Katie Ruth, Felita Powell, and I actually nailed down that they are starting to happen. Anduril is going to raise billions of dollars yet again, and the valuation that they're talking about is in the $60 billion range, which is roughly double the price from last year.
So $60 billion. Help us understand what is Anduril's product portfolio right now? Where are they making most of their money? Where are they going? Tell us a little bit about that.
Yeah, for sure. I mean, it's expanded a lot in recent years. They've got a couple of massive contracts in different ways. One is they bought a company that sells autonomous submarines, and they won a multi-billion-dollar contract from the Australian Navy to deploy that. They've also taken over close to $20 billion contract from Microsoft for mixed reality headsets for soldiers. And they have a litany of other products, counter drone technology, drones themselves, solid rocket motors. So this is a company that if you've stopped stopped paying attention to them in recent years has really expanded their product set. But the customers are still essentially sort of the military agencies for the U.S. Homeland Security, as well as allied nations.
And who are the legacy players here that Anduril is hoping to take business from?
Yeah, the legacy players are, so the largest defense contractor in the US is RTX, formerly known as Raytheon. There's sort of these large prime contractors, Lockheed Martin, Northrop Grumman, Boeing, General Dynamics. These are, sort of decades old prime contractors that sell, sort of all the weapon systems into the government. And it's really been essentially Anduril is saying, look, this has been this closed club of a handful of large companies that were founded decades or centuries ago. We want to join that club. We don't think this should be as closed off of a system anymore. And that's sort of what they've been inching toward year by year. It takes a while. They're much smaller than those larger companies, but they are growing much, much faster.
I want to ask you a little bit about the regulatory environment for these types of companies. I mean, under the current administration, it seems like there has been a lot of conversation. It'll be easy for these companies to grow. And the question I have is, I mean, do you foresee this changing at all? If the administration changes a couple years from now, would the prospects for Anduril change down the road? Is this sort of a moment where they have to raise as much money as they can for the next couple of years because it's uncertain? Or do you sort of, from what you hear from people, I mean, is this sort of a more secular shift in the way, where Silicon Valley is headed, where they see money flowing, where they think they can get returns from? How are they thinking about it?
I gotta do the annoying reporter thing and say it's a little bit of both. Uh, Look, this company was founded under the first Trump administration. It grew significantly under the Biden administration, and so it has grown and been successful under two different sort of political regimes. I think what I'm seeing across defense tech and national security and anything really touching the government is folks that see a clear path to winning a lot more government business during this Trump administration, whether it's just because they know the right people in the right places, which is a tale as old as time in politics. This administration is particularly rewarding to those people. They want to grab as much land, as much territory, as many dollars as they can. It really does feel a bit like a land grab sort of situation where this is a moment to take advantage of. The stars are aligning. I will say there's obviously nuance and caveats to that. Like, obviously, an administration is not uniform. It is not full of the same people thinking the same way. You do have obviously like tensions within sort of the national security regime around how large of contracts do we give new upstarts in coming out of Silicon Valley like Anduril. And I think a big sort of moment we're going to see is whether the U.S. Air Force sort of awards Anduril sort of its very lucrative autonomous fighter jet program, which it's in the running for. I think whether it wins that, fully or, gets a huge chunk of that will be, a really big, interesting sign to watch.
Last question for you, Corey. I mean, you have covered so many different pockets of Silicon Valley. Some of the earlier reporting to the information was the ride-hailing companies, the Airbnbs. Now we're in this era of defense. I mean, what are the questions that come to mind for you as it relates to this company? As a Silicon Valley darling in some ways. I mean, in some ways they're all the same, but defense is such a different category. I mean, I wonder how you're thinking about reporting questions as a reporter.
As a reporter, I am humble in what I don't know, and what we don't know a lot right now is like the more specific numbers inside of Anduril's business. Um, we've reported pretty heavy cash burn over the last year. I mean, this company's never been close to profitable, and that's by design. And I think what can sneak up on us reporters and also folks in the Valley is, how quickly a business model can switch, can kind of flip into place where all of a sudden they have sort of really profitable unit economics. They're winning a ton of programs. They kind of go from this position of looking like, are they ever going to make a cent on their business, to actually being able to lock in a pretty sticky customer base and make a ton of money. And I think, where will Anduril make that flip? I think you saw it with SpaceX. You obviously saw it with companies like Uber, where everyone was talking about, will they ever make money? And they've been a pretty dominant story in recent years. So that's always, I think, kind of an emanating question around our reporting is, sort of, what does the business actually look like? And is the more important story for them, how much power they've amassed, or is the more important story, are they actually going to make it as a business?
Great. Well, Corey, I want to thank you for coming on. That was Corey Weinberg, our Deputy Bureau Chief of Finance here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. I'm already excited for our next show tomorrow. Have a great rest of your Tuesday. Bye-bye for now.